Coming up on Market to Market, researchers address the stink over the two main sources of methane. Breaking through barriers in the shell ring. And market analysis with Don Roose next.
Much risk management down here.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, July 17 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The analysis of this week's economic reports could be described as June was great, July could prove troubling. The Consumer Price Index gained 0.6%, pulled higher by rising gasoline and food prices. Retail sales surged 7.5% as stores adapted to new shopping habits and ever-changing restrictions. June's budget deficit hit $864 billion, nearly as high as the entire fiscal year of 2019, as outlays for the Paycheck Protection Program, unemployment insurance, and nutrition assistance checks were tallied. Creighton University's Rural Main Street Index improved last month but remained below growth neutral. Despite $16 billion in farm support payments, bankers expect a 5% increase in loan defaults over the next 12 months. This week, the CEO of Texas-based Parsley Energy said U.S. oil production hit its peak in early 2020 at 13 million barrels a day. Fewer rigs are now in operation, translating to less oil and lower methane gas levels. A new study points the finger at energy and agriculture as the two biggest producers of the greenhouse gas. Peter Tubbs has the story.
The world's production of methane soared in 2017, according to the Global Carbon Project, a group of scientists that tracks changes in greenhouse gas emissions. The study revealed human activity creates 60% of the Earth's total methane emissions annually. The scientists concluded that levels have risen more than 9% since 2000, or the equivalent of putting 350 million more cars on the road. The surge is being blamed on the oil, gas, and coal industries, as well as agriculture. Methane has 86 times the heat-trapping potential when compared to carbon dioxide. The greenhouse gas climate scientists believe is the biggest part of the climate change equation. The white paper calls agriculture the largest single source of methane, produced through a combination of ruminant animals and the disposal of their manure in lagoons. Rice production was listed as one of the other significant sources of the gas. The bulk of the higher methane emissions in the United States was attributed to the growth of natural gas production over the last 20 years, primarily from fracking. Leaks from natural gas wells and pipelines are a significant methane source. Those fighting the increase in greenhouse gases include Burger King, which recently released a controversial advertisement showing a plan to cut methane emissions in cattle. The calculation of what is being called humanity's methane budget was put together by a team of 91 scientists from 21 countries, led by Stanford University. The recent economic slowdown due to the COVID-19 pandemic may have slowed emissions temporarily, but it is expected to climb as economies come back online. From Market to Market, I'm Peter Tubbs.
Getting an animal into the ring for a livestock show takes months of preparation. Now, imagine getting ready while in a wheelchair. July 2020 marks 30 years of the Americans with Disabilities Act. The ADA prohibits discrimination against individuals with disabilities in all areas of life. Our originating station, Iowa PBS, is marking the anniversary in a variety of ways, including our coverage. Josh Bittner introduces us to an exhibitor who's making a name for himself in the show ring.
The kids are always part of what goes on the farm. We have 300 Angus cows now. Alec is right there in the mix of cows when we're working cows or whatnot. I guess Alec was probably born with the love of livestock.
Get up and up.
Alec was diagnosed with transverse myelitis at age 6 months. It's a swelling of the spinal cord is what it is. It's rare but not uncommon. The term we use is somebody flipped the light switch. He was at daycare and his arms quit working. The babysitter called us and we rushed him to the ER. They didn't quite know what was wrong. The next morning they had rushed us to Iowa City. The doctor had diagnosed him right away with it. A lot of sleepless nights. Alec probably didn't sleep for till he was 5 years old over this deal. At the time, he was the youngest one at Hopkins to be in a power chair. We spent a lot of days out in Johns Hopkins Hospital in Baltimore. We actually, our first trip out, I think we spent 2.5 months.
That up. This. Forward. Turn. Drive.
He drives with his head, and you would think that a 4-year-old wouldn't pick that up, and he did it in 10 minutes. He was right to the point where he was ready to crawl when this first happened, so he's never crawled, never walked, never, the chair is all he's known.
I use it every day and use it for a show.
The showing, I guess, came when we had a nephew that started showing 4-H, and came time to weigh in fair calves, and Alec asked where his were. So how do you say no to that? And sure as heck, we got that calf to lead. Yep, 7 months. So the cows have all grown up with Alec in a wheelchair also. Alec's goal is to be involved in the farm as much as he can. I just want him to be interested in the pedigree, Angus.
7 months.
Yep, 7 months. 7, you said?
Yep. Yeah, stop.
Right now, he just wants to be the boss of the farm. He doesn't miss anything. He knows what needs to be done, and if it's not done right, he'll let you know.
Alec, chasing back by Mama.
We actually have 3 kids in 4-H. That's all they do all summer also is work calves and show calves.
Well, Chad and I both showed, so it's nice to see them following our footsteps. And they all love doing it.
I just like to have fun, and I like to go around, Iowa and stuff. And it's just super fun to show.
The Gatto family is an incredible family. Just being around Alec and being around the show with him, he's like a true inspiration to all of us. And the way you can put passion and hard work and determination together and to make something good and something great into what we do.
I think it's pretty neat that my siblings get the show. It just makes me feel happy. He was kind of getting stuck in the show ring because all the wood chips were piling up and couldn't get really nowhere.
But he showed he had to get pushed through the ring with his other chair. And I remember I was talking with his mom. At that time, they had a bar that they had zip tied underneath his chair with wheels on it. And they flipped the chair over, and I was like, oh my goodness. So the next day I started the Facebook group called Tracks for Alec. Several people were interested in maybe seeing if they could help him.
I grew up on a farm here in Iowa. My neighbors were national champion cattle showers.
Tell me about why you wanted to be part of the Iowa Governor's Charity Steer Show.
Because people ask me.
When I saw the news piece when he was showing his cattle and finding it hard to drive, he would have not had the capabilities with his insurance to probably get a track chair for the day-to-day use. I happened to have the connection with a track chair, and we do a lot of community service type things here, and that's just been the model since it's been developed. VGM was founded on the principle and auspice of helping the small business community in the medical world. So I contacted his parents and asked if we could help them with a track chair. They were very receptive, just salt of the earth, nice people. So we were all there, we got it unloaded, and we were waiting for him. He knew nothing about it. And when the bus pulled up, he's very shy, so he didn't want to get off the bus because there were so many people there and stuff.
Alec doesn't like to be center of attention, but once he got in that chair and got to hook a calf to it for the first time, he was instantly excited. Totally changed his life on the farm. Since he's got the track chair, Alec, way more independent, gets a house door open for him and out the door he goes. That was something we always wanted, and our Angus family is kind of who had started it. It's the people, the experience you get to have is why we do it. Alec doesn't care whether he's first in class or last in class, and he's been both. So for me, I feel bad just because of everybody says how moving, you know, how inspirational he is, and don't get me wrong, he is, but for us, that's every day. So
Look here.
it's just the way he is.
Next, the market-to-market report.
China made major purchases in corn and wheat, but it was wet weather that moved the markets. For the week, September wheat gained a penny, while the nearby corn contract lost 4 cents. The soy complex received some attention from Chinese buyers to feed the bulls. The August soybean contract improved 11 cents. August soybean meal shed $6 per ton. December cotton lost $2.37 per hundredweight. In the dairy parlor, August Class 3 milk futures gave back 37 cents. A rally in the livestock sector. August cattle increased $3.28. August feeders expanded $6.95, and August lean hog contract, well, that added $2.92. In the currency markets, U.S. dollar index dropped 72 ticks. September crude slipped 8 cents per barrel. COMEX gold kept rising with a $10.80 gain per ounce. And the Goldman Sachs Commodity Index added a point to finish at 338.40. Joining us now to give us some insight is one of our regular market analysts, Don Roose. Don, good to see somebody in person.
Great to be back, Paul. Thank you very much.
It's nothing personal. It's just forgive me if I miss some of these social cues back and forth, okay?
We'll work on it.
Let's start with wheat. That was the darling because of the Chicago contract first. Why was that such a rally?
Well, you know, I think when you look at it, the U.S. market is such a small market. We're only about 7% of the world's supply. But Russia is the largest wheat exporter in the world. So like we always say, it comes down ultimately in these crops, what kind of demand do you have and what kind of weather issues do you have? And what happened at the bottom of the market, Paul, the funds were really short the market, and then we started harvest in Russia. The yields weren't quite there. They weren't quite here in the U.S. either. Then we got into some really scorching hot temperatures into the hundreds, and that really started the rally and propelled us up.
Well, you look at the fundamentals of this market, and it doesn't seem to add up to what the market's been doing. Why is there such a conflict like you're talking about? We don't produce that much, but yet here we go on our rally, other than Russia.
Well, you know, part of it we were propelled because the funds were short like 35,000 contracts, so buying back out, it did push the U.S. market just too high versus the rest of the world, so we got uncompetitive. And so when you look at it towards the end of the week, we dropped about 15 cents off the top. The other thing that happens when the wheat market was trading about $2.25 higher than corn, around the world, people that can substitute starts to look at that. So just because one commodity starts to move too far out of line, it changes some of the demand dynamics. But the wheat market is bent back. Here in the U.S., we have tighter soft red wheat stocks, and that's probably end user buying is probably going to show up. Hard red wheat stocks are adequate, spring wheat stocks are adequate, but it's the soft red wheat. And then the Black Sea and Europe stocks are both down.
And if China comes into the market and buys again, I mean, they don't normally buy wheat from us, do they?
No, and that was the rumor. Yeah, as you know how it goes. It was a hot, dry forecast, and then the rumors start that China is going to buy soft red wheat from the U.S., mainly because they're not meeting the Phase 1 contract so far that they have. But they didn't show up, and so we had a setback.
Well, you mentioned a couple of things that factored into the corn market as well. China did buy huge loads since 1994, biggest there. But weather was also a factor. We ended up not being as hot and dry over the weekend. Then there were rains that hit the area. After this huge sell or buy by China, the market just kind of went, meh. Were you surprised?
Paul, it's always more important how you react than the actual news. And there again, it just told us that we were overvalued, and it's a one-hit wonder. Basically what happened is China used up most of their tariff-free duties that they had put out for buyers to use outside of the COFCO and Sinograin, the state-owned organizations. So I think basically it was a telegraph. They probably used up most of that, and so now are they going to come back into the market again? And we just have too big a supply here in the U.S. and around the world, and it's very much, Paul, like we've had the last few years. It's a supply shrinking market, but not enough in corn. And then we have the world competition, Argentina 40, 45 cents higher than we are, Brazil 20 cents higher than we are, very much like the last 6, 7 years. You get a weather scare, last year wet, this year dry, and how do you react to it? Because in the end, without a demand underneath us, we sink back down again, and that's where we're at today.
Always a demand in the carrot issue. We also have a story about commercial carry, and this one is a question that came via Twitter. Feeder Paper was asking us this, Don. He says, what's the commercial carry in the corn market telling us? Seems to be narrow and strong and friendly when you look at it just on face value.
Well, I think what it did narrow in. I think what he's talking about is the difference between the same crop year, December and December this year, July 21, that same crop year, 7 months, and it narrowed into about 19 cents difference. It was out to 26 cents difference. It narrowed into 19, and now it's pushed back out to 23.5. So that also told you in really scary years that spread will invert. In other words, December will go higher than next July. So like he's saying, that was probably a signal that this thing was not as bullish as you would like to believe, and that's one of the things we watch also. So now it's back out to about 24, 25 cents, and in a big crop year, that'll put the widest carry right as we're going into the end of November.
Are producers, are they in the area that they should be maybe locking something in before we continue to get more rain, or the weather's not as hot? We have another repeat of last weekend. What are you hearing people doing?
Well, I think when you look at it, how many chances do you get to market a crop? I think part of the, last year you had a little window. This year you had a little window. I mean, it was very small. It wasn't at prices that people wanted, but it was your window. It was open for marketing for a while. Now the window's closing, and there's probably still a downside risk premium in a market. You usually put the lowest risk premium in a market right as you're starting to harvest when you have the crop. So for a producer, you still have to look at what am I going to do with my storage? Am I going to be able to tuck all the crop away? Do I have to pay commercial storage? So the marketing window is open, not like it was, closing. Maybe you get another weather scare. Maybe you don't. It's getting later in the season. Once you get past pollination, it gets tougher, Paul. But we do use about 3/10 of an inch a day of moisture.
So heat like we have today, absolutely. So you talk about a window. Is that window a little wider in soybeans right now, or is it closed?
No, the window is wider there, and the prices, basically you're back almost to the 50% retracement of the big winter high to the low. That's 907. We keep hovering back close to 9, just under 9 here at the end of the week. Downside is still there. You're keeping risk premium because, as you know, from a producer standpoint, anything can happen in August on soybeans. And we have these high pressure systems that keep coming from the southwest. They come into the Midwest, they could stick and stay and cause some real issues. All year they moved around. NOAA says they're going to continue to move around, so don't get caught up with a fear of a hot, dry pattern that sticks. So no, keep your eyes open for the window and marketing opportunities.
So maybe someone who has their hand on the window a little bit is China. I mean, they go and buy again late in the week.
Well, the difference that we have on soybeans versus corn and even on wheat is we do have a real buyer, and that's China. They're underneath the market. They're buying setbacks. Brazil's basically out of the market. We're the cheapest soybeans in the world. Hard to believe, but we are. We're so far out of the market. So we do have the advantage, and that's narrowing the basis, and old crop. And China probably stays buying if they're going to meet that phase 1 deal. They're behind. So the logical thing is to buy soybeans because it gives you the most bang for your buck from a dollar standpoint. So, while tensions are tight, that's who we're dependent on, but not only in the grains, but also in the hog market.
Well, we'll get to hogs in a moment. Let's start with live cattle, though, first. That one did go up. In fact, all three went up, as we said. Lot of different parts to this market playing out. Which one do you think is the most dominant when it comes to live cattle right now?
Well, I think the biggest thing is we were afraid that we weren't able to kill all the cattle. We backed up cattle, and the real question mark is, are we going to work through it in a normal manner? Before we get to the placement figures that are down 20 to 25% month after month. On the bull side, the dance on the market is, when do we run into those really low placements? Have we cleaned up this big supply, big weights? How much meat are we going to carry forward? Is school lunch program going to be here, not be here? COVID, the demand issue. So the bottom line for the livestock people is we've got big premiums in the market. The government's saying 104 on the first quarter of cattle, and they're saying 105 for the second quarter. The normal last 26 years, here's something to think about. Last 26 years, the government's been putting out prices, average prices. They've been off on average of $7 up, $7 down, so not that far off. So take 104, add $7, you're at 111. That's the big miss that they have. The futures are 113 on February tonight, roughly. So
there's something there.
There's something there, something to look at. But we've got premiums in the market, Paul, and then what's going to happen with the COVID? What's going to happen with the demand? There's no doubt that we're building in premium to the market because someplace we're going to run into these tighter supplies.
And we're going to run into processing tightness again in facilities if there's another outbreak. And we haven't heard about those in a while. Everything seems to be back up and getting to not necessarily pre-pandemic levels of production. But the feeder issue then, there's this concern that the feeders are still hiding out on pasture. It's dry in the Great Plains. It's dry here, so they're no longer on pasture. They're in the lots. Where's the news? Where's that needle right now? What's more accurate there?
Well, we know where we're at because we had placements down 20, 25% for month after month after month. You add up those numbers and you have probably about 1 million head of feeders outside the feedlot. So when are they going to come to the marketplace? They've started to in the last month, but that means you're still going to have bigger numbers coming at you. So like in the cattle market, you're looking for these windows. Where are the holes in the market you hear about so much? And there's going to be a lot of dicey things go on the cattle, a lot of start and stop. End of the week, you push the cattle market up pretty fast. In August, up $5, limit up almost one day, then almost part of limit up the next day. So I would expect more of that in the cattle.
You need good heart medication for that market. You always have.
Well, good seatbelt, too.
That one, too. Hog-wise, we struggled for much of the early part of the summer. Now, the last couple of weeks, we put rallies together. You talked a little bit about China. Is that what's in this market? Is there something else?
Well, China is the demand underneath the market. Remember, our export pace is strong, but China took 42% of the exports in May. So, I mean, they're just a huge elephant. We have to count on them for more demand. Supplies, Paul, are huge. We were supposed to euthanize 7.5 million head of hogs. Realistically, it's very likely that we didn't even do 2 million, 1.5 million. So big supply still here. Weights are down a bit. I think the big thing is people started feeding different, everything else, much like the cattle. The numbers looks like they're a little more current now. maybe a false indication. When you look at the cattle market, they rallied $20, $25 off the bottom. Some of the grains did too. The hog market basically went lower here just recently than the COVID break, and now we're just back to where we started. So I think the market's still fearful of supplies. Remember the government saying the first quarter $55 a hundredweight. We're 61 basically on Feb and 63 for the second quarter.
All right, good to see you, Don. We'll talk to you in Market Plus.
Sounds
we
great.
got to talk about cotton and dairy and your questions. So thank you, Don. That will do it for this installment of Market to Market. We will talk more in Market Plus, so you can join us there. Find that on our website at markettomarket.org. Now, we have 3 take-on-the-go offerings associated with this program in podcast form. Market Plus, Market Analysis, they're available on Fridays, while the M2M comes your way every Tuesday with a behind-the-scenes look at this program and our stories in the works. Next week, we'll get back to looking at a story involving as a man gets back onto the farm after a serious accident. Until then, thank you so much for watching. Have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content.
What's the most complex industry on Earth? It's not genetics, or meteorology, or logistics. It's a business that involves them all. It's farming. Thank you, farmers, from Pioneer.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.